2.08 lakh crore is gross and 1.92 lakh crore is net. See, the gross should have been 1.92 lakh crore. They are saying that the gross is 2.08. So by my calculation, there's 17,000 crore more that the government is borrowing. It is not as per borrowing target. That is what the DA secretary is saying, but the math is not saying that. The math was 5.8 was the overall borrowing, 7.2 lakh was done, plus a 17,000 crore was switched. We need to add that. So actually already we had done 3.89 in the first half because of that 17,000 crore which was switched with SBI. The balance should have been gross 1.92. Now the gross is 2.08 and they are saying the net is 1.92. By my calculation, 17,000 crore more is being borrowed and therefore the fiscal deficit has risen if this is the way it is. But let me get to the market man, Dhaval Dalal, the CIO fixed income at DSP is joining us. Dhaval, what did you make of this number? 2.08 gross, 1.92 net?
Well, I think, Lata, these numbers are pretty much in line with what market was expecting.
But it is more than the budgeted borrowing, isn't it?
My sense is that this 2.08, if you adjust against the SBI switch of 0.17 that you discussed, then you get this 1.92 number right there. That is perhaps...
That 1.7, why are they adding it in the second half? It is already done, no? That should be first half borrowing.
That might be my guesstimate, but my sense is that there is no requirement to assume that the government is going to increase the borrowing program. I may be saying that because they have categorically said that the borrowing program remains unchanged at this point of time. So I think market will go with 2.08 as a gross number and perhaps add to that the potential supply through SDL that we are going to see in the second half. And then try to figure out what kind of pressure that you are going to see in the first 3 months as the government is going to borrow more in the first 3 months.
So tomorrow the markets are going to work with an unchanged figure for borrowing.
That will be my assumption.
Okay. And therefore you should expect a positive reaction in the bond markets?
Well, I think at this point of time, it's a sigh of relief that the government has stated.
But it looks like you're already sighed your sigh of relief. Today itself the yields have fallen.
Yes, today is a welcome day for the bond market as market participants have reacted positively to the expectations of government sticking to the borrowing calendar. Going forward, I think market's going to also focus on what's going on in the global market, particularly the USD and the dollar's trajectory, because as the US Treasury yields are trending higher and it's busting above the 2.3% crucial line, it remains to be seen what happens in the global market and what sentimental impact it has on the bond markets in the emerging markets.
All right, wait, there's more happening. There's more happening. Economic Affairs Secretary saying that discussions on with the Reserve Bank to check whether a little more dividend can be declared. This is very important. So the government is admitting that there is a tight fiscal situation here and we are giving them the benefit of doubt that 17,000 crore of switch is being counted in the second half. I cannot see how that can be done. That switch is over. It should be first half. But if you give them the benefit of doubt, only then you can say that they are sticking to the government borrowing program. No change in fiscal buyback switch program. No, that still doesn't answer. See, this is the problem when the press conference is held in Delhi, but the arithmetic is known in Bombay. I mean, I don't blame Delhi reporters are not interested in what happens in Mint Street and what happens on the NDS home market. But the pointed question to ask over there is the SBI 17,000 crore switch counted in the first half? Or is it getting counted in the second half? If it is not getting counted in the second half, there is a 17,000 crore extra borrowing. That is the pointed question which the DEA secretary has to answer. The 17,000 crore of bonds which were switched with SBI, is that getting counted in the second half? If that's getting counted, we are fine. Then we have stuck to the borrowing program. But if that is not counted, then looks like there is an additional 17,000 crore borrowing. As well, there is a sentence from the DEA secretary that they are in conversation with the RBI to probably get a little more dividend. I don't know how that can be done mid-year, whether there is any precedent to doing it mid-year. But that's the other sentence that's coming in. Dr. Sen, all these facts in front of you, sir.
Well, I'm a little surprised, actually. They are in talks with RBI to fill an RBI hole of 35,000 crores, which I suspect the RBI will not be able to meet. Now, if you're sticking to your original borrowing target, you're still going to have a hole of 35,000. Okay, so are we really talking about the government actually reducing the fiscal deficit from the target? Because you have that. You have the fact that this investment program has done nothing. So there's a huge hole out there.
Yes, spectrum is less than expected.
Spectrum, same problem. So in any case of the overall financing, and instead of just focusing on the borrowing part of it, you really need to think about the financing of the fiscal deficit.
Okay.
In the non-debt part, you're seeing fairly substantial holes.
Yes.
So presumably what they are doing is saying that we are not planning to plug them now. We'll worry about plugging them in the
later,
in the last quarter.
Yes,
which is why they're front loading the market borrowing program.
Yes, sir.
And leaving space for further borrowings in the final quarter.
I think that is the straight way to read it, Dr. Sen. Thank you very much. If you can wait by, I'll be grateful. We've got another market expert joining us, Pankaj Sharma, CIO Fixed Income at DSP BlackRock Mutual Fund. Pankaj Sharma, I guess you read all the flashes that are going on CNBC TV18. That gross is 2.08, net is 1.92, and in conversation with the RBI over dividend. What is your sense? Have they really stuck to the borrowing program?
Yeah, I think they have. I think they don't want any more surprises besides what's already been happening on the other front. So I think they have tried to demonstrate that they will stick to a program. Everyone was expecting, at least we were expecting, that they will seek to borrow about, on the gross basis, about 2.08 lakh crores.
So, but the gross, according to my calculation, was 1.92.
No, I think total was 5.8, and I think already 3.72 is done. So
and 17,000, 3.72 plus another 17,000 crores switch with the SBI. So actually 3.89 was done.
Okay. So anyway, I thought maybe you are right, but again, that is still a small number.
Yeah, 17,000 crore if they reneged, you won't mind, is what you're saying.
Yeah, it's just a small number.
Yeah,
so
it's a 1 week borrowing actually.
Yeah. So I think we're expecting about 15,000 crore of weekly kind of participation. And I think...
So there is another point I wanted to ask you. The DA secretary said that they will front load the borrowing and complete most of it in the first 3 months. Would you guess that therefore as of now they are maintaining the borrowing program, but there is a chance that we will get some surprise in the last quarter?
So there's always a possibility, but I think let's not speculate too much. I think there is a lot of noise otherwise also what has been happening. I would say there was expectation it would be front loaded. I think in the second half anyway you will have some of the state loans also borrowing happening as well. So they will leave that perhaps more for the state loans, that part of it. So that's where we feel this is okay.
Oh, right. There a sentence ran saying that they are in discussion with Reserve Bank on the dividend issue as well. But
Lata, as well as, this is again difficult to comment on that. Okay? So till the time it finally materializes, people have been throwing different numbers since demonetization. So let's see what happens. Neither of us have control on what they are saying.
Discussion with RBI on extra dividend going on. That is the statement that they have made. Let me invite my colleague Sapna, who was with the DA secretary when he was making those announcements. Sapna, well, I pointedly want to ask you that the first half borrowing program was 3.72 plus 17,000 crore, which was switched with SBI. So the expectation in the street was 1.91 gross borrowing program, not 1.91 net. Can you fill us in on whether the secretary could explain that difference?
No, actually, I asked him this question twice, but, he did not really respond to that. And they are very clear. In fact, what we had done in the afternoon also, that the gross borrowing number for H2 is expected to be 2.08. He has only clarified on the net number at 1.92. And they are very, very clearly sticking to this number. Okay. So basically, not much of a headway in terms of this question on the 17,000 crore thing, which appears to be valid, but government is not on board on that front.
Okay, so well, then even if it is 70,000 crore, it's only it's not a great deal. It's only a 1 week number. But there was something more in terms of discussion with RBI on an extra dividend.
Absolutely. In fact, we were the first ones to flag this off a day after the demonetization report had come. And that was the first interaction with the DA Secretary at that point in time, wherein he had clearly indicated that, look, anything accruing out of demonetization may be closed. But there is a separate parallel discussion on in terms of a new capital framework, within which probably there will be a new methodology for RBI to have a look at its reserves. And possibly some part of it has already been kept aside. He had indicated somewhere around 13 to 14,000 crores at that point in time, but today no numbers have come out. And he has reiterated that stance, that policy stance, that, that discussion is still ongoing. So probably somewhere around December, Jan, hopefully we should be able to hear on this front. But even at that point in time, Lata, he was very clear that we are having this conversation in terms of some additional dividend coming through in the current financial year itself. And a couple of other things,
So additional dividend on the basis of a new way of calculating capital required by the central bank.
Yes. Okay. Yes, but he has not explained, exactly in so many terms. Today it was a very cryptic reply of just around 4 to 5 words that, that discussion is ongoing.
Okay. Anything else you have to fill in on?
Yes, absolutely. After, setting the cat among the pigeons, and this was on expected lines, but, basically, the government has indicated today that, they will do a reassessment of the fiscal situation, rather the revenue side and the expenditure side, especially on the expenditure side. And today they have announced additional capex of around 25,000 crores, which the CPSEs will mount.
Okay, and so that is not coming from the budget. That is the CPSEs. That is coming from the public sector units?
So he has clarified. Yeah, absolutely. So he has clarified the money is to be spent by PSUs, but going forward, if there is additional expenditure required, which is outside the budget, then obviously the procedure is that they do a supplementary. They've done one in the August session of in the monsoon session of Parliament also, and in the winter session also they will do so. In case those supplementaries have to be factored in, so there is going to be a reassessment of the borrowing program sometime in December. And if need be, they will borrow more. He has indicated that very clearly, to which I followed up asking that then down the line, do you expect this to impact your fiscal deficit numbers? So he was very clear that as of now, there is absolutely no change, confident of 3.2%. We'll also look at the revenue side of the story, which I'll tell you sometime January, and a call will be taken. So very, very quiet, very tight-lipped on the deficit and that kind of thing, but a very clear hint coming that there will be a reassessment of the borrowing program in December, and we should be prepared for that.
Okay, that I think puts everything in place. Sapna Das, thank you very much for a very comprehensive paraphrasing of what the DEA Secretary had to say. If we have our guests with us, Dr. Sen, if you heard out my colleague, sir, does this give you a sense that we are in for a little more borrowing?
Almost certainly. What it says in effect is that we are not planning any fiscal package as of. We may be planning, but we certainly aren't announcing one anytime soon, is what they're saying. So at least the issue of whether a fiscal package is on the card is laid to rest for the moment.
Okay.
Right? Yes. Because when he's talking about finalizing the supplementaries in December, it means, in fact, that the fiscal package, if any, will be decided then.
Yes.
So that's what it's saying. But, that's the expenditure part.
Yes.
As I said, that,
the problem is with the revenue part.
Is the revenue part. I mean, are they being super optimistic on GST collection?
Yes.
And I'm a little worried about their discussions with RBI about additional dividends.
Yes.
Which means that the sense that perhaps they have is that RBI doesn't need as much money as RBI thinks it does.
Yes.
But, the fact is that there are still costs that RBI has to bear.
Yes, that point is taken. How is the market going to read all this? If Dr. Sen smells from all this a possibility of higher borrowing later on in the year, later on in the second half of the year, will the market also smell that, or will it react with relief? Pankaj Sharma, that question to you.
So again, people have been speculating that the markets would react adversely. I think today's price action has been much more constructive as far as the bond market is concerned, in spite of what has been happening on the FX market. So,
and tomorrow will be the same, you think?
Yeah, I think you have to realize also with so much liquidity in the system, the largest players in this market are the state-owned banks. And I think where the credit growth not happening, they are also, at least they're able to pick up excellent carry on the inventory of the government bonds that they're carrying.
Yes.
So it's as things stand today, I don't think the rates are running away either way, neither going down too much or going up.
So we will stick with 6.6, 6.65, you think?
So I think the range is, again, it's very difficult to be so precise in this market.
Okay, what is your approximate range? What is your larger range?
Just 650 to 675 is what we have been telling for some time.
All right.
Since the last policy, and I think that's where we will stick it.
Okay, Dhaval, what's your analysis of what all this will do to the markets tomorrow and in the next few weeks?
Well, I think while we are in the quarter end period, some amount of price action could be justified because of the price action for the quarter end price adjustment. Having said that, over the near term, as the market participants digest this news about prospects of extra borrowing and front loading in the first 3 months, we are going to see some amount of range bound action, and we do expect yields to gradually trend higher in line with what happens in the global markets. But as I said, there is nothing in knee-jerk. The sentiment has improved marginally, and it remains to be seen whether there is any further negative news that surprises the market and hurts the sentiment.
Well, Dr. Sen, how will the MPC look at it? As you have read it, the MPC will also believe that the government has left on the table the possibility of a higher borrowing. Will they take kindly to it? Will they ignore it? What might be the reaction? Should we...
You see, the point that Dhawan is making is absolutely right, which is that the yields will actually start trending up. Now, if it does, what happens is that the likelihood of a rate cut then becomes a lot weaker for the very simple reason that you then widen the gap between the yields and the repo.
Yes.
And I'm not sure that that's what the MPC would want to do.
Okay.
And the front loading suggests that that's exactly what's going to happen.
All right. Okay, we will leave it at that. Dr. Sen, Pankaj Sharma and Dhaval Dalal, thank you very much for joining us in this discussion and giving us your perspective. Markets may not react too badly tomorrow, but the fact that the government has left on the table a hint that they will look at the borrowing program if there is further expenditure is something that will rankle in the mind of the market. As well, the exact math that Dr. Sen was talking about, revenues are not quite adding up, and therefore that gives more credence to the fear that the borrowing program will be re-looked at a later date. As well, conversation with the RBI that the central bank could try and give a little more by way of dividend. All this indicating that there is a very, very tight fiscal situation out there. This will keep yields rising gradually, along with, of course, global reasons for that trend.